Happy Friday, everybody. Welcome back to Swan Signal Live, brought to you by Swan Bitcoin, of course. Go to swan.com/SSL to let us know you came from the show and to check out Swan, which we'll talk more about at the end of the show. John, how's it going, man? Happy Friday to you.
All good here, Brady. Happy Friday. Good to get back into I guess we can call it a regular show. Although we have different types of regular shows nowadays, but our last one was the end of year recap and predictions, which I think we got good feedback on that one.
Yes,
but we'll get back into the more regular news recap and macro markets recap here.
Absolutely. Let's just dive right in then, I guess. It's here we are. What are we at? Haven't even looked at the price today. 90,335 is what I'm seeing on my laptop here, and that's where we've been. It's no surprise. I've been hanging around between 80 and 120K for pretty much a year now, as we discussed last week. And if you guys haven't checked out that show, it is a fun one. We had Brandon Quittem on, and we did awards for 2025 and predictions for 2026 in 7 or 8 different categories. And we'll follow up on that show at the end of this year and see how we did. We definitely hit some stuff last year. But had some misses as well. And, we'll call it like it is. We'll admit our misses here.
That's interesting. I was going to suggest we'll review anything that we got spot on right. And if we got things wrong, we'll just remove it from the YouTube channel and delete it.
That's right. Early take note. You're going to have to edit some videos. Okay. So in light of this sideways markets, I thought it would be nice for a little bit of healthy hopium. There are two kinds of hopium, the healthy and the unhealthy kind. And I think there are, if you look at the fundamentals, in kind of long-term view, I think it's a healthy kind of hopium, helps keep that conviction alive and just remember why you're here. I saw this posted to Twitter this week, Bitcoin adoption S-curve, compared to the internet adoption S-curve in the red line there. And you can see Bitcoin down on the orange line starting to take off, and it looks quite similar, which to me makes sense. The fundamental thing here is that obviously Bitcoin is built on the internet, and which is an exponential technology in itself, which is built on computation, which is an exponential technology. And so Bitcoin is inheriting these exponential growth. And, obviously the internet adoption is very mature now, so that there's not a lot of exponential growth. That's the top of the S-curve where the laggards start adopting. But we're still in the early adopter phase here with Bitcoin. And when you see that line, that kind of logarithmic line that goes up, the asymptote of the S-curve, then that Bitcoin adoption will really explode over a short period of time. And I would say the internet was really started being adopted, of course, with the advent of the web in the early 90s, when it was invented at CERN, actually. The first web browser was invented there, and it was the early 90s. So the web took off and brought a lot of people onto the internet. And that happened over about 15 years. And then we got into the social network era and the mobile era. And that was basically a 20-year period where much of the world, the majority, I don't even know what internet adoption is around the world, but I think in most major cities and developed areas and developed countries, it's, pretty damn high at this point. So we're looking at Bitcoin approaching that adoption curve asymptote, and maybe that'll happen from 2025 to 2035, 2040, at which point we'll have vast majority of the world onto the Bitcoin network. And so that's how I anticipate it. I think it's a really good corollary for what we can expect with Bitcoin adoption, the internet adoption, that is. So I like looking at this one every once in a while.
Yeah, I like it too. I always wonder exactly how they define adoption. I'm sure they have something behind their methodology, but yeah, I think it's a good comparison. What comes to mind for me is I couldn't help but think of the now infamous line that Paul Krugman gave of the internet will basically be as impactful as the fax machine.
Yeah.
And we love to dunk on him for that and many other reasons, right? But just historically speaking, when he said it at the time, he said it at some point in the 90s, I believe. And it was not, but when he said it, people were not immediately like, oh, you're an idiot. Like it was kind of a normal thing to say back then.
Yeah.
It was like the internet's, it's just not going to be that big of a deal. Obviously, the opposite is true. So you just have to remember that with new technologies, it's not always obvious. And in fact, the prevailing consensus is often the opposite of what ends up playing out when you look 5, 10, 20 years down the road.
Yep. I forgot we had this one, which is basically what I said in a much more eloquent formulation. Daniel Batten, you know, champion, legendary Bitcoiner at this point, who's fighting the good fight against the environmental FUD, which I think at this point we are winning pretty thoroughly. And we're moving on to having to deal with quantum FUD. And we said before the show, I think we need to do a solid segment in the next few weeks on the quantum FUD, and I think that would be useful for people. But here, Batten's talking about remembering in 1995, trying to persuade the Department of English professors to let him do his thesis on this newfangled thing called the internet. None of them had used it, but they all had an opinion about it, and they were all happy to tell me why my research proposal was risky and reckless. And fast forward to 2025, same vibes. Plenty of Bitcoin skeptics, plenty of people calling it reckless and risky. Once again, not one of them has used it, let alone researched it. Back in 1995, it turned out that the opinion of one 20-something student who had studied and used the internet was more informed than a team of college professors who hadn't. So the same is true today. The opinion of the Gen Zer who studied this, is consuming their 40 hours per week of Bitcoin content, is well ahead of economists, journalists, and financial advisors who are well established, quote unquote. All right, another piece. Let me actually go back here. Another piece we have is this Bitcoin wealth table. Adam Livingston posted this week, and he writes, Bitcoin is the greatest wealth creation tool ever. 100% of all 3-year plus holding periods since 2010 are positive. The median 5-year return is 125% per year. That's 57x on your money. The green squares don't lie. John, what's your take on this one?
Yeah, I think the take, and I just said this, I did a short segment at the New York Stock Exchange this week, which is always cool with FinTech TV. And, I did eat some crow because I said, look, I thought we were going to end 2025 in the 150 to 200K range. Obviously, I was too high with that estimate. But what I said, which, the haters could say this is just the way you defend being wrong, but I think there's truth to this statement. And the statement is it's easier to predict 5 years down the road than it is to predict 5 months down the road. I think that's true in many things in life. I think it's true in financial markets for sure. And that's what this chart makes me think of. When you start looking at longer periods, which that's what Adam's looking at here, 3-year plus periods, in that particular stat that he shares in the copy of the tweet. The evidence is pretty clear, right? Any 3-month window, any 6-month window, things are quite different. Things get quite noisy, but the long-term trend is quite clear.
Yeah, I think that median 5-year return is gonna go down. It probably is trending down. If you look at maybe the past 5 years versus the first 5 years of this chart, just because volatility is decreasing, and I think we're going to be kind of stair stepping and grinding for a long time in price. And I could be completely wrong about that because we could hit that that exponential curve and be onboarding, millions of people into the network over a short period of time. And maybe I'm wrong. This is interesting to me, John. We have a hard time, and I think many, all of our viewers and listeners here have heard this before, but humans have a hard time understanding exponentials. Our minds think linearly, and right now, I think the prevailing, at least for me, and I think it's becoming more common, I'm not sure if it's prevailing, but the mindset about Bitcoin price is that we've moved into this new era where it's not going to be as volatile. No 80%, bear markets, super deep bear markets, no, 3, 4, 500% bull markets. And, in early in Bitcoin's life, it was thousands of percent bull markets, but they will grind up in price. I find it interesting that, I've talked a lot about this for a long time on Twitter, and just like my thinking about where Bitcoin price is going. And I always talked about that S curve, and it's going to explode at some point. Now I'm talking a lot about how price is going to just kind of gradually go up. Maybe that's a sign when someone who's been thinking exponentially for a long time about an asset, and I'm starting to think linearly about it now, but I just talked about the S curve adoption. I wonder if that's a signal. I don't know.
Yeah, I go back and forth on this one, honestly. Whether you talk about exponential development, or you just talk about diminishing returns, are things just kind of going to grind linearly? I mean, there's certainly going to be some level of diminishing returns, right? When an asset goes from $0 or $1
Sure.
to what it does today, it can't keep up that pace forever. But what I also think is noteworthy, I don't think it's just going to be diminishing returns on and on and on. And I think what we saw in gold and silver is pretty good evidence of that. In this past year, silver, like these are assets that have been around for a long time, right? Silver still, even with the fact that it's been around, there's no like incredible new adoption of silver happening, right? Like that's which you can say is happening with Bitcoin, and yet silver still goes up 150% in the past year. So like if it's possible for an asset like silver, and then gold on the other hand went up, I think it was like 60 something percent in 2025. And just like round numbers, if gold went from a 20 trillion market cap asset at the beginning of last year, a 50% increase would obviously take it to 30 trillion.
Right.
Um, Bitcoin is roughly 2 trillion. So gold added 5 Bitcoins last year, just like back of the envelope math. If something like that is possible, then that makes me think if we do get some big adoption events in the US, or de-dollarization type events, or like straight up MMT type policies in the US, then yeah, I think Bitcoin could go borderline parabolic. Um, Really hard to predict if or when that type of stuff does happen, but I don't think it's just a foregone conclusion that it's just like, oh, grind it higher, slow and steady forever.
Yeah, agreed. So maybe the case is, the floor is higher now. No more deep bear markets, which were based a lot on retail sentiment. Now that we've integrated Bitcoin into the traditional financial system to such an extent, and that's only going to continue, I think that sets a much higher floor. But maybe the ceiling's not coming down as I'm thinking. So that is some good healthy hopium for everyone out there. Lynn Alden puts out an amazing paid newsletter, and I encourage all of you to pay for it. It's a ridiculously good value. I can't remember the cost, but I don't know. It's not hundreds of dollars. I know that. And it's extremely high value. Anyway, this is a piece of her newsletter talking about her expectation for Bitcoin's price. And she writes, this is for our podcast listeners. I'll read it out. The price of Bitcoin is currently chopping around 90K. My base case is that the daily low it reached on November 22nd is the bottom for this sell-off. Since it's a volatile asset, that opinion is loosely held, but it's the base case I'm operating with for now. Since November 22nd, there have been 6 weeks of choppy sideways price action, false recoveries, and overall poor sentiment, but momentum indicators have generally stabilized. Liquidity conditions are likely to improve as the Fed continues to expand their balance sheet, and sizable fiscal deficits continue to roll in, as we all know, By now, let's beat the drum one more time. Nothing stops this train. And most of the overvalued Bitcoin treasury company activity has been washed out, which we talked about last week as well. So
and I'll
there's
just,
Lynn's take.
did you have more on Lynn's take?
I didn't. Go ahead.
Okay. No, I just wanted to add quickly. I'm number one. I've been a subscriber to her newsletter for. It's called a newsletter. I think we should even. It's like probably there's some people who put out like a newsletter and it's like a short email. Lynn, if we even call it a newsletter, it's more like research, investment research. And I've been a subscriber for 6 years now, so I get a ton of value from it. But yeah, I feel like my takeaway from that is Lynn is not mid curving it. I feel like mid curving it right now is pointing to like a million different metrics and, oh, it did this and it broke this range and therefore it has to do this and you should be scared and, trade with this 3-month price target in mind. Like, to me, that's mid curving it. You're totally overthinking it. Lynn is like, look, these are the long-term trends, long-term factors that allow for Bitcoin to be on the trend that it's been on. They're generally intact. Could some big black swan event happen? Like, yeah, sure, it could, but don't overthink this. The recent low is probably the low, and it's likely higher from here.
So if we do get another all-time high this year, I think that puts the nail in the coffin for the 4-year cycles. Would you agree?
I think it would have to, with the caveat that I gave last week, that like someone out there is going to claim it's the extended cycle, and this is
now
part,
a 5-year cycle, 6-year cycle.
Someone will come up with something.
Yeah, of course. I mean, it just the fundamentals are there to make the case that the 4-year cycle is over. We'll see if the numbers play out this year. It'll be interesting to watch. It's been such a part of Bitcoin's, the identity of Bitcoin's price. It's been this kind of core meme of Bitcoin's price action for so long. So I think it will be notable if it does indeed break this year, and we'll be watching for that.
Oh, yeah.
Okay, some big news this week. Morgan Stanley, obviously big blue chip name in banking. They manage 20 ETFs, which is a pretty small number. But most of that is under the Calvert, Parametric, Eaton Vance brands. So the Bitcoin and shall not be named ETF will be the third and fourth that will bear the actual Morgan Stanley brand. And like I said, blue chip brand. So there is meaning in their decision there. And yeah, John, this is your world, so would love to hear what you think about it.
Yeah, one alternate headline here is breaking news: Morgan Stanley opts to ignore Ethereum.
Exactly. Solana is the new cool crypto, I guess.
Yeah, and any listener of this show and follower of Swan's content, you're going to know that we don't really think there's like a long-term sustainable investment case or monetary use case for Solana. So we certainly would not advocate any clients or Morgan Stanley clients to think that you can just allocate to Solana and have it appreciate over time. Morgan Stanley has a different view. That's what makes the market. But I think it is at least somewhat noteworthy that they just skipped over Ethereum. They just decided to go Bitcoin and Solana. But I think the couple interesting takeaways here is it's kind of so the ETF guys, James Seyfert and Eric Balkunas at Bloomberg, they had some good takes on this. It's really rare for think about what the Bitcoin ETFs the last couple of years of history has been. It took a long time for them to get approved. They finally got approved almost exactly 2 years ago now. We'll have some good 2-year stats to quote probably next week. But there's like, what is it, like 11 of them, 12, something like that. And there's a distribution where the big ones have the most, IBIT and Fidelity, et cetera. But there's already 11 of them, and no one's going to catch IBIT. That one, iShares, Bitcoin, IBIT is going to be the biggest. And Morgan Stanley even knows that, right? Like they're not doing this to catch them, but I think they just realize, this is my interpretation. Well, number one, the fact that they even chose to do this when there's 11 ETFs really tells you something. So now my interpretation of what they're thinking is they see Bitcoin becoming a persistent allocation in client portfolios for everything from ultra high net worth all the way down to retail. And I think they're just looking at that and saying, we're going to basically pay BlackRock 25 basis points, a quarter of a percent every year to run this. And they must have looked at the stats that show IBIT is BlackRock's most profitable ETF.
Right.
Again, I don't think Morgan Stanley's in this to just for pure profits, but I think they're just looking at it and saying, we do expect to allocate to Bitcoin ETFs for our clients for a long, long time going forward. I don't know if they expect it to be 5% or 10% or 1% or what. But if you're them, then you're just kind of thinking, hey, we can manage this ETF. It's not rocket science to manage a commodity-based ETF with Bitcoin in it. So I think they're just looking at it and saying this is like a 20 plus year time horizon game that we're playing, and we're going to have our own ETF, and we're not just going to give away investment fees to some other asset manager.
Yeah, it makes sense. Well, Bank of America, another huge bank in the United States and around the world, started their Bitcoin ETF, like made Bitcoin ETFs available. They announced this last couple of months, but January 5 this week, it took action. It went live, and they are framing Bitcoin. They say crypto here, and we got to separate the two. But they'll talk about crypto, but Bitcoin is predominantly the asset that I think advisors will be recommending over time. So they're framing it as a 1 to 4% allocation for suitable clients, and this is not. They've approved 4 spot Bitcoin ETFs for wealth advisors to recommend. So this, unlike Morgan Stanley, is not Bank of America issuing its own ETF, but they'll sell IBIT and others and Fidelity's ETF for clients, recommending it to clients. I think, if I'm not mistaken, Bank of America is the biggest bank in the US, the biggest retail bank in the US. Is that right?
I don't know offhand. I wouldn't be surprised if that's the case. And just remember that they also have if they're not number one, they're probably 2 or 3.
Yeah.
And just remember they also have Merrill Lynch, which is the wealth and investment management division of that broader firm. So I think that's the big takeaway here, is that all of those Merrill Lynch affiliated advisors now have the green light to allocate the 1 to 4%. And further, just this is more than just talk now. They have those specific ETFs approved. So from everything I can tell, and I've even talked with a few friends who are Merrill Lynch advisors, it's like they have the green light to do this. There's not another shoe that needs to drop.
If you want to check out Swan, go to swan.com/SSL. That URL lets you know that you came from the show, which there's some friendly competition behind the scenes, John. So I like to drive those numbers up, pump those numbers up. Swan.com/SSL, open it up in another tab, leave it there, and you can check it out later. All right, let's go. Next one. So speaking of the ETFs, James Seyfert posted this week, asking about how spot Bitcoin ETFs have fared recently. And he says they've held up pretty damn well considering price action. Yes, they saw about $6 billion in outflows to end the year, but that was less than 10% of their peak cumulative inflows in early October. So I think it's interesting that they're holding up. I think one potential idea about the ETFs would be that, this is where we'd see maybe outsized outflows compared to price action, because this is where relatively new entrants into Bitcoin price exposure might be, predominantly getting into the game. And if that's the case, as we know from previous bear markets and bull markets, people who get in on the hype train really drive the last couple of months of parabolic run on a bull market, will drive that parabolic drop on the other side as they get out, because they don't have the conviction to hold on through the volatility. So it's interesting here to see, to me, that my expectation might have been there'd be more outflows, maybe outpacing the price drop, and doesn't seem to be the case, which to me is encouraging and kind of gets back as another kind of pillar of that new floor, that higher floor that Bitcoin price will have, in my prediction.
Yep. Yep. And I think the meme version of this is all the boomers holding the ETF are big hodlers. Like that's how it's been interpreted on Twitter. It's like
Exactly.
you're not shaking them out of their position yet. And obviously that's oversimplified. It's more than just boomers who hold the ETFs. But yeah, it's a relatively small outflow given not a massive drop, but Bitcoin went down roughly 25-30% from the October peak, and it didn't really shake out too many people from their position. And also keep in mind, not only was it a 25% drop, but it was really counter to expectations. So if people didn't have conviction, they could, in theory, they could have been shaken out and said, "Oh, this thing isn't doing what I thought it was going to do. I'm out." That really didn't happen very much.
Yep.
So I think people do recognize this is not a 2-month trade. This is a long-term hold.
Yep. 10% outflows versus a 25-30% price drop. So I think that's good to see. It's encouraging. Okay, so we've got some. Let's do this one first, and then we're going to jump into some news that has dropped surrounding the Trump administration. There's quite a bit of several posts that and decisions that he's put out this week on Truth Social, and also we have this one on tariffs. So the Supreme Court is taking a look at whether or not Trump's tariffs are legal, and the chances that they will be upheld. So the Supreme Court ruling in favor of the Trump tariffs on Polymarket has gone up to 31%. So it's still low. It is increasing right now, but it's still pretty low. It's 70% chance that they will be ruled against. So I think this is interesting. Trump keeps pushing the boundaries of the power of the presidency. There are various checks and balances in our system of government, and the judicial branch obviously is a big one for checking the power of the presidency. And we'll see what happens. I think it'll be fascinating, and there'll probably be more cases like this that will be brought up against some of Trump's actions. So what do you think about this one, John? And what would be the economic kind of fallout of the Supreme Court ruling either in favor or against Trump's tariffs?
Yeah, it's a complicated one. It's messy. I don't think it'll get framed sometimes as a binary, like tariffs are on currently, and if the Supreme Court rules against it, okay, tariffs are off now. I don't think it's going to play out that cleanly either in reality or in the market impact. And what I mean by that is there's definitely going to be different types of tariffs. Like I think there's like these broad based tariffs, which was like, all these countries are getting a tariff. That's like one type of tariff. But then there's also like industry specific tariffs. And I don't think all of these are going to be treated exactly the same. And you even see today, I think it was the guy, Kevin Hassett. I might be wrong on that, but I think he put something out that said, oh, even if we get a negative ruling from the Supreme Court on tariffs, like we have other methods to engage in similar types of policy. It was something like that. So
Yep.
it's not going to be as simple as, okay, Supreme Court ruled this, tariffs go away. There's just going to be other ways that they can try to accomplish it. So I think the market impact is going to be messy as well, because the market's going to digest, okay, what is going to happen here. My take on this last part that I wanted to say, which is more speculative, is the fact that they delayed it. I agree with the poly market increase. Like if they were going to rule against this, you would think it would have been in the works for weeks now. You would think. I don't know. It's a weird time of year with Christmas and New Year's, but you would think if they were going to rule against it, it was pretty much done at this point. So the fact that they're delaying it, I'm speculating. There could be something else behind the scenes that I don't know of. But the fact that they're delaying it seems to imply that other things are being considered, and who knows who's in whose ear about this. But it makes me think that it's less likely to get a totally negative ruling against the administration.
So if those,
Did you say January 4th? The other piece of news is it looks like they're going to rule on it the 14th, which is
yeah,
next week on Wednesday.
yeah. What do you think happens though if the market, like, what would be the market reaction to either side? Do you think?
I tend to think it'll be. I don't think there would be like some massive rally. Like some people might think that because of what happened in April of last year, that, oh, when tariffs got put on, there was this massive sell off. So when tariffs get taken off, there's going to be a big rally. I don't think it would play out that way. I think it would be more idiosyncratic in terms of some companies or industries could rally a ton or sell off a ton. I haven't really thought through the impacts of like which specific companies have been hurt the most by tariffs or helped the most by tariffs. But I think rather than that, then the S&P is going to like, blow out positively. I think it's going to be more sector and company specific.
Yeah, I think my take is that markets will probably favor the limits on executive authority here, because he did issue these under emergency powers. I think corporations don't necessarily like tariffs. I think the interpretation of them, and of course, there's the folks who are politically against Trump will definitely tout this as a win for the check on Trump's pushing the boundaries of the power of the presidency too far, and they'll like that. But I think it might actually be seen as mildly bullish, especially for like retailers and consumer goods, import heavy type businesses. So we'll see what happens next week, and we'll keep an eye on it. We'll talk about it next Friday. Okay, we have 3 posts to Truth Social from this week from Trump. This one's on the housing market, and his announcement was he's talking about directing Fannie Mae and Freddie Mac to buy up to $200 billion in mortgage-backed securities, using their untapped $100 billion portfolio capacity. And the idea here is to reduce 30-year mortgage rates, which is currently at about 7.1%, by compressing the MBS Treasury spreads widened to 180 basis points. So this is, what do you think? I mean, is this going to be welcomed by the housing industry? Is it going to affect house prices for single family homes and actual, humans, human families buying homes, as opposed to, as we'll get into in another one of these posts, big corporations buying up tranches of mortgages?
I tend to think this is one of those events that it's just on the margin. There was a video of Trump around Christmas time, so we didn't cover it on this show just because the timing was kind of funny. But he was doing an interview, and he pretty much admitted, he's like, "Yeah, look, I can't do that much on home prices because the older generation, the boomers, they have a ton of their money in their houses, and if I do this, they're going to be pissed because their nest egg just went down." Like, it's kind of crazy to hear the president say that when the Bitcoin community has been talking about this for years and years and years, that people are using their houses as savings accounts, and it's a problem, but it's politically infeasible for politicians to allow a big price decline, right? Trump basically just admitted it. And I think what you see here, this announcement and some others, it's aimed at small marginal improvements, I guess you could call it, for a first-time home buyer. So let's say mortgage rates, mortgage spreads, which means the mortgage rate would come down a little bit. Yeah, it's like incrementally better for a home buyer, but this is not like a wholesale improvement where, kids who are 23, 24 years old are now like, oh, great, homes are so much more affordable for me.
Right.
I think this is more like, I can't really see this action taking mortgage rates down more than like 0.5% at most.
Yep.
Because remember how big the mortgage market is. There's like trillions of mortgage paper out there. He's talking about buying 200 billion. It's something, but again, it's not going to take mortgage rates down to some affordable level.
Yep.
So it's just doing what is in the political realm of possibilities, and it's not a total game changer if you ask me.
Yeah. If you combine it with expectations for, rate cuts, Fed rate cuts, it might, complement the effects of that somewhat. So we'll see. It'll be welcome for me. I've got a new mortgage to sign later this year, so we'll see how it goes.
As I pull up the St. Louis Fred data, the 30-year mortgage is 6.16 is their latest number.
Okay, I said
Um,
7.1 earlier. Yeah, I was totally
but
wrong about
it's
that.
well, it depends.
It
It kind
depends.
of it's
Credit
it's in that area.
credit
Yeah,
worthiness and all that. Yeah.
right. Some people are going to be a little higher, some people a little lower. But you just made me think of that because if you see some rate cuts on the horizon, which Trump obviously wants, if they do buy this 200 billion in mortgage bonds, that help, all these things help incrementally. I think his goal is to take the 30-year mortgage rate down from where it is now, get it something closer to 5 maybe.
Yeah.
And then I think he'll view that as a victory. He'll quote what it was at the peak. It was probably 7.5. And then he'll be like, look, it's down to 5. I got you guys 2.5 points. Like, I think that's how he's looking at it.
Yeah. It's good for midterm elections. Okay. This next one from Trump this week was proposing a increase military spending budget from about $1 trillion to $1.5 trillion. He calls this the dream military. And he's, this is a safety and security message. And I think it had some interesting effects at the time that it was posted on defense stocks. And we won't talk about whether or not we're for or against this sort of politically, but I would love to understand maybe the outcomes of this in terms of money printing, nothing stops this train type stuff, and on the stock market, which we've already seen have some effects there. Maybe it'll continue to have positive effects on defense and defense adjacent companies.
Yeah. Yeah. And I think we also do have to give the caveat. This is a president, so not Congress. It's a president talking about the 2027 military budget. So
Right.
fiscal year 27. Who knows if he was talking about fiscal or calendar? It's 3 months difference, right? Fiscal year 27 starts for the government this October. So he's talking about something that's at least 9 months away. And presidents can propose
Yes.
spending and budgets, but
Congress
Congress.
holds the purse strings, as you
Yeah,
said. Yeah.
yeah. So, presidents do influence it. That's for sure true. But this is far from a done deal. But this is all in the nothing stops this train category for sure.
Yeah.
Fiscal austerity is just not in the cards, and this is just yet another example of it.
Okay. And I probably should have done this back to back with the first one, but this is going back to the home markets. And he's saying that the American dream is owning a home. For a long time, this is sort of the cornerstone of the quote unquote American dream, which is great branding. Whoever came up with that, sounds like a Reagan thing, but I think it existed before that. So he's talking about inflation, interest rates going up, making it harder for Americans to buy homes, and we know that rates of renting versus buying homes have changed a lot in favor of renting going up over time. So he's saying here that he wants to take immediate steps to ban large institutional investors from buying more single family homes, and he's going to call on Congress to codify it. So again, going back to your point, this is a proposal from the president, Congress to codify it. I don't think he has the executive authority to act on this one in particular. But yeah, what do you think about this? Maybe go into a little bit about the housing market and how large corporations play a role in buying up house mortgages and effectively, as Trump said, buying the homes.
Yeah, yeah. I think it is a tricky topic because sometimes the quote unquote institutional investors are just a conduit. Maybe sometimes it's their own capital, but other times they're like a conduit from other people who provide the capital. I think the bigger picture is what Bitcoin proponents have been talking about for a while, which is why are homes such a good investment historically?
Yeah.
Why have they continued to appreciate? It's because we have mostly all these policies in place that allow them to appreciate, with the biggest one being that people want something to save their money in. They want something that they can just confidently say, when I look back 10 years from now, 30 years from now, this thing will have stored my wealth.
Yep.
And the dollar obviously does not fit that description. It has not fit that description since at least 1971. So people use their homes as a savings account. But I think what he's after here, and this is something that has been proposed many times in the past, it's never gotten across the finish line. So we'll see. But the idea that it's just going to make it that much harder for people who are buying homes purely as an investment to do so. I don't think there's really any way to stop a wealthy person from buying their second home or their third home. Like, that's
Right.
really difficult to just like have an approval process in place for everyone who's buying a home. But the easier thing is to just say, hey, if you're Blackstone, if you're one of these massive firms that has a fund that's literally aimed at buying a ton of residential real estate properties, well, like, we're not going to let you do that. There'll be a lot more to sort out in the nitty gritty detail, but yeah, it's definitely a Bitcoin adjacent topic, the topic of home affordability.
Yeah, home affordability is at the highest. I guess not the affordability, but housing costs are at the highest that they've ever been. And if you look at the charts, you can see a big rise up, during 2008, 2007, 2008. I guess it would be probably 2006, 2007, before the big crash. And now we're far higher than that, with a similar looking just run straight up for the past couple of years. And we've kind of chopped up there at the top. Some people are calling for the next housing crisis. I don't know if you've looked into this or not, and it's fine if you have, just say so. But in 2006 and 7, as the housing prices were running up, a lot of that was driven by junk mortgages, people getting 0% mortgages with like very low credit worthiness, people buying 2, 3, 4 homes as investments because housing prices were going up so much. Do you think we have any of that kind of activity going on right now? Like, is there any like fundamental rot going on in the system, the mortgage system?
Yeah. Firstly, I would say not something I've looked into deeply, but I'll share a loosely held opinion on it. I don't think we're anywhere close to 2006-7 type excesses in the real estate market. And I think the things that you saw back then were just completely bonkers in
Yeah.
terms of limited credit checks or no credit checks or limited down. And everyone just thought, also there was like this belief that everyone just kept repeating, there's never been a nationwide decline in home prices. This pocket can decline, this pocket can decline, but it's never been a nationwide decline at the same time, at least since post World War II, which is like basically the data set that everybody looks at, right? So that was the belief in it going into 2008, and obviously that turned out to not be true. And I think it's one of those things where 2008 is still relatively close enough that people have not gone to the excess that happened back then. That doesn't mean again, same thing. You could still have pockets where home prices decline by 20%, but I would say it's more because they got very frothy and they're coming back. I don't see some massive real estate bubble happening
Yeah.
and popping at this point.
Yeah. Same. Okay. Quick couple of quickies here. Here's that Lockheed chart that we talked about earlier, where they plummeted for, let's see, 7% just after Trump banned stock buybacks and dividends on U.S. defense companies, quote unquote, until problems are rectified. Just 2 hours later, President Trump said U.S. military budget should be raised to $1.5 trillion, and the stock is now up 7% after hours. We've seen these Trump announcements with sort of suspicious timing, to kind of playing with market pricing since he's in his second term here. And it's interesting that he makes this announcement that he very easily could assume would affect U.S. defense company pricing, and then 2 hours later makes one that's very bullish for U.S. military budget. I don't know, just one to bring up, and things that you notice over time. And this guy knows how to play markets, and he's been doing it his whole life.
You have to wonder what's going on behind the scenes when announcements like that come out so quickly, and the stock responds dramatically in one direction and then dramatically in the other. You have to wonder, at the very least, where there's some like phone calls behind the scenes.
Yeah, this was happening, I remember, in like January, even December, after during the transition time. This happened with crypto quite a bit. Eric Trump made a couple of comments similar to this, in the sense that it was like, buying up crypto and then making very bullish statements, etc. But it is what it is, and it's just something to note and watch. All right, we've got
money.
So I'll play this here. This is just a fun little video that John picked up on social. We'll play it here and I don't know, just talk about it. It's just something fun to end on.
Money 8. ETF stands for this kind of traded fund, for the type of marketplace at which they can be bought and sold. Cameron.
What is electronic?
No.
Harvey or
Jason?
And silence.
It's an exchange traded fund. Back to
I appreciated it. We had ETF news this week with Morgan Stanley coming out with their own Bitcoin ETF, as we discussed earlier in the show. And it just surprised me because Jeopardy is obviously a trivia game. These are people who like fancy themselves good at trivia, very knowledgeable. They like train for this stuff, right? They practice. Yeah. And it's also so surprising to me that they didn't know it. And then it's also good reminder that like how much of the populace out there is just not following anything finance and investing related.
Yeah. And the question itself, I mean, it was, I think it was one of it was a $200 question. So it was the easiest question in the category. And, it was like, on the platform where they buy and sell. So it was just like, it's obvious answer, even if you don't understand markets. But I think the one takeaway here is that, some people don't really pay attention to the, just the way that the financial system works, right? And a lot of people are just passive investors or don't invest at all. And I think makes up the vast majority of Americans. For sure. Yep. All right, let's wrap up here and talk for a minute about Swan. John's a managing director at Swan Private, and we really pride ourselves on helping our clients build a long-term strategy for building generational wealth with Bitcoin. And the way we do that is just building strong relationships with clients. So John's on calls and texts and at events where meeting our clients and spending time with them in person all the time. That's what he does, is build relationships and help people and their families really establish a Bitcoin strategy. Swan has built out ironclad security setup. We're SOC 2 Type 2 compliant, which is a very rigorous security certification that requires continuous audits. We've built out Swan Guard, which provides a plethora of checks against fraud and abuse and scams, etc. We host exclusive events for clients, as I mentioned, all over the country. We have Swan salons, we have happy hours, and then we're at the big conferences as well. Gather up Swan Private clients and Swan Premium clients, and we just enjoy getting to know one another. We also put out research and content like on this YouTube channel, which has grown quite a bit, over 220,000 subscribers now. If you're not subscribed, please click that button right now. Hurley has a show called No Second Best. It's getting 60, 70, 100,000 views for every video he does twice a week. Really great, concise, 10 to 15 minute videos about what's going on in the news, and also just kind of a focus on longer term topics as well from time to time. You can go to swan.com/SSL and check out more information about Swan Private. We also have a Bitcoin IRA product. You can go down here and play with this fun calculator, put in your own assumptions, and see how Bitcoin can aid your retirement account growth. We have Swan Vault, which is our collaborative custody solution. It makes advanced Bitcoin cold storage, simple. We have videos for each of these. Adam Back and Lynn Alden are in this one talking about Swan Vault, for instance. And you'll get 2 Blockstream Jades, and you'll have a Swan key, your cloud key in your Swan accounts, and you can use those. 2 of them are required to move your Bitcoin. You have one of them. Another one is as backup for replacing, recovering, etc. So check out Swan Vault. I think it's a great product. You can look at our other custody options. We've also just announced Swan Generations, which is an awesome service for long-term family wealth planning. You can give parents, legal guardians, and others can make irrevocable gifts of real Bitcoin to younger people. And when they become of age, you can select an ascension age where they'll be able to take control of that Bitcoin. But those gifts, once given, can't be taken away from that wallet. They are irrevocable. So go here if you're interested in that. It's sort of a new service on the scene. And I think it's a really great setup. We'd love to tell you more about it. You can talk to your Swan Private representative and sign up for priority access here. All right. Again, swan.com/SSL. We'll take it out this week. Next week, again, John and I will be back, and we're lining up a guest here in the next couple of weeks to join us on the show, and we will see you again next week. Thanks so much for joining us.
See you, Brady. See you, everybody.